The broadcast is now starting. All attendees are in listen-only mode.
Hello, I'm Peter Towers, Managing Director of ESS Small Business and ESS BIZTOOls. Welcome to the Crowdsource Funding Equity Raising Briefing. Crowdsource funding is now available for small proprietary companies. This is an exciting time for the small and medium-sized business community. Crowdsource funding is targeted at small proprietary companies and inventors, people who have invented new products, processes, or services. So let's look at what you've got to go through to satisfy the requirements. First of all, the legal phase. Group turnover or sales has to be under $25 million per annum. And the group asset value of the company and its associated entities has to be under $25 million. The company and none of its associates can be listed on a stock exchange anywhere in the world. And the company and none of its associates can be listed on a financial market that is operated outside of Australia. So they're the legal tests. Let's look at some subjective comments. The company can operate in any type of industry. There's no restrictions or no specified industries like there is in a lot of government grants. And there's no age specification. So the company could be a brand new startup or it could be a 90-year-old company. Doesn't matter. The second phase is what we're calling the subjective tests. And basically, if you satisfy one of these tests, as long as you satisfy all the legal tests, of course, then I think crowdsource funding, equity raising is something that you should be really looking at within your company or organization. So category A is looking at companies with turnovers over $2 million per annum, which wish to scale up. So this category could be from $2 million to just under $25 million. If you're wanting to take your $3 million turnover at present to 7 to 10 million over the next 2 to 3 years, you will need an injection of money into the business. Now, you may have that saved. You may be going to raise it from your current shareholders. If you intend, though, to raise that money for the funding of your working capital, work in progress, inventory, debtors financing, you'll probably have problems getting it from a bank in the current climate following the Banking Royal Commission. Banks are tightening up everywhere. One way to raise that capital so that your scaling up process is not stalemated for a couple of years will be to try to raise capital from the market. And that is what crowdsource funding has been developed for. You might be an early stage, high growth and disruptive company. You've got plenty of good ideas, lots of enthusiasm, raring to go. As long as those ideas, when they're analysed and put into a business plan, budgets, cash flows, etc., make sound business sense, then you're probably able to look seriously at raising capital utilising crowdsource funding. Perhaps you want to expand your business operations. You've developed a concept which works in one city, and now you'd like to expand it in a number of cities and towns all over Australia, or indeed the world, if that's what you're aiming at. Crowdsource funding could be a great way to raise some capital. Or maybe you're looking at acquiring other businesses and not sure where you're going to get the money from. Or you've just got a vision for your business. This is what you'd like to achieve. The one ingredient you're probably missing is cash. Well, this initiative of the federal government's in creating crowdsource funding equity raising gives you the opportunity to try to raise that capital? You'll need to be able to tell a good story. You will need a good business case. So do you require funding to implement these visions? If you can raise all the money internally, that's probably great. But if not, this could be one way to go. The second group of companies that we think could be interested in crowdsourced funding is those that have a succession strategy to finalise. I know a lot of business people who over the last 30 years didn't really worry about superannuation funds because they were ploughing all of their profits, all of their surplus money back into the business. And a number of them told me when I was their accountant that they viewed their business as their superannuation fund. Unfortunately, we got to 2018 and there are a lot of businesses for sale. The baby boomers are starting to think about retirement. And this has meant that it's very difficult to sell businesses. Perhaps your son or daughter-in-law or even grandchildren have now come into the business. They might want to take over, but they don't have the cash to buy you out to allow the founder to be able to retire. So perhaps there's an opportunity to gear the company up as a crowdsourced funding company, raise some capital from the public, get sufficient cash to enable the founder to be paid out or partly paid out, and the company can continue. Now, someone rang me the other day and said, oh, no, but I would want to, as a relative of the founder of the business, to be able to reclaim the business for the family. Well, that's okay as long as the family members of the company have accumulated enough cash over the next 5 to 7 or 8 years to maybe make an offer to those crowdsourced funding shareholders to buy them out. I'd be very surprised if crowdsourced funding shareholders want to be shareholders in any company for more than a decade. They'll be looking to liquidate their investment because that's how they will make money or how they will be hoping to make money. So if your family wanted to take the business back over in the future, that's all right. They can do that. There's nothing stopping them as long as the business has been successfully run, so there's been cash flow generated. Let's look at section C, balance sheet review. Does your company have loans that are other than bank loans secured on a first mortgage basis on property owned by the company? Or are the loans being secured on someone else's security? And that someone else might be making noises about getting their security back. They want to do something with it. Or do you have a situation where the bank of mum and dad have placed loans into the business? A report in the Financial Review only yesterday indicated that 25% of the loans for SMEs in Australia was financed by the bank of mum and dad. Now, perhaps mum and dad want to do something else. Perhaps they want to retire. Perhaps they want to buy a Sunshine Coast or Gold Coast unit and they'd really like their money back. Well, their money could be replaced by some external shareholders. Perhaps you've got loans from other family and friends. That's now becoming a little bit embarrassing because they'd like to get their investment money back. Or you've got high credit card debts that you'd like to pay out. There's some of the other possibilities that are all geared around what's going on in the company's balance sheet. So are the directors interested in raising capital to pay out these loans and save some interest? Admittedly, this is all going to require the allocation of shares, and the current shareholders won't own 100% of the business, but wealth creation is what the important consideration is in all this. Or perhaps you're too old, too big for early stage innovation company status, which would have helped you raise capital because the investors got a specific taxation benefit out of it. But if you've developed a new product, process, or service, and your company's over 3 years of age, or in some cases over 6 years of age, or if your company has had expenditure of over $1 million, or your income over $200,000, you're not going to be eligible for early stage innovation company status. Crowdsource funding could be very desirable for you. Your turnover might be $7 million. So obviously your expenditure is probably at least $6.5 million. But you've now calculated what it's going to cost to commercialize your invention. You've got a prototype, but there's still a lot of activity to happen and a lot of costs to be incurred before you can get that prototype properly installed into the marketplace. And you might have used up a lot of your spare money in developing the prototype. So perhaps raising capital from external investors is worthy of your thoughts. In fact, I think there'll be a lot of companies who are in this very position. Early stage innovation company status wasn't planned for progressive expanding companies because it was virtually planned only for startups. So crowdsource funding is the opportunity for you. So let's look at the capital. You could raise up to $5 million every 12 months. And there's nothing to prevent you going back to the market in 12 months' time and raising another $5 million. Other than the market, are they prepared to invest in your business? You can combine this capital raising with what is called a Section 708 capital raising. This is Section 708 of the Corporations Act, which enables a company, a proprietary limited company, to raise up to $2 million in a 12-month period from no more than 20 investors, if they're retail investors. A retail investor is someone who is not a sophisticated investor. And a sophisticated investor is basically someone who has got net assets of $2.5 million or has a gross income of at least $250,000 for each of the last 2 years. And these facts are certified by an accountant. Section 708 capital raising is part of the original proprietary company structure, which has a limit of 50 shareholders. So if you went out and raised $2 million from 20 investors, you are eating up a fair amount of the allocation of up to 50 shareholders in the proprietary company side of the business. And a sophisticated investor that I just explained what they were doesn't count in the capital raising limits. So there's a chart on what is the new relationship between a proprietary limited company if it becomes a crowdsourced funding company. The ordinary shareholder limit is 50, and every shareholder is counted. A proprietary company can have employee shareholders, and they're not counted, and their number can be unlimited. And the crowdsourced funding shareholders are also unlimited, and they are not counted towards the 50 shareholder limit. A proprietary company that is a crowdsourced funding company will therefore have the potential of having 3 share registers. It will always have 2. It will have ordinary shareholders and crowdsourced funding shareholders, and it may have employee shareholders. So let's look at an overview of the crowdsourced funding legislation. You have to make an offer, just like you do if you're doing an IPO, an initial public offer. In that case, you prepare a prospectus. In this case, a crowdsourced funding offer document is prepared, and that has to be uploaded to the platform, which is the website of the crowdsource funding intermediary, when the crowdsource funding intermediary is satisfied with the document. Now let's look at a crowdsource funding intermediary. They are businesses which hold an Australian Financial Services licence, and they've been given a special additional licence to provide a crowdsource funding service. So the crowdsource funding offer document has to be placed on only one of the crowdsource funding intermediaries' websites. There are in fact 7 crowdsource funding intermediaries that have been appointed by the Australian Security Investment Commission. You can deal with all of them initially to talk to them about how they're going to promote your company, what their charges will be, and what else they can do for you, how many potential investors they have on their database. And then you enter into an agreement with only one intermediary who will then handle your listing from there. All applications and applications money pertaining to the offer have to be handled by the intermediary. That is a very specific law that the government has passed. And the reason for that is that there is a very strongly worded investment warning the government has insisted on, so that potential retail investors have a clear understanding that all investments are risky, whether they're on a stock exchange or they're crowdsource funding type entities. So even if your favourite aunt wants to give you $100 to invest in some shares, she cannot give it to you as a director of the company. She has to go onto the website of the appointed intermediary, identify the company that she's interested in investing in, and then the intermediary's website will provide for her an investment warning document, which she has to read and acknowledge that she's read and understood. And only then will they accept her share application form and her $100. That is very important, and ASIC will be monitoring that. The maximum that an offer can remain on the website of the intermediary is 3 months. You can list your company for a period of less than 3 months, but I always recommend to people think about potential issues, so take the 3 months. If the maximum amount that's been specified in the offer document is obtained earlier than 3 months, that's okay. The intermediary then closes the offer and will send the net proceeds after their fee to the company's bank account. The main features of the crowdsource funding legislation are that the retail investor can only invest a maximum of $10,000 per company per annum. They can come back again in 12 months, of course, and invest further money if they wish, another $10,000. When an investor places money to the intermediary and completes the share application form, they then have 5 business days as a cooling off period. They can ask for their money back, and the intermediary has to destroy the share application form and would never disclose to the company directors that XYZ was going to invest but changed their mind. The company is not required to appoint an auditor until the company has raised a cumulative amount of more than $3 million from either crowdsource funding share raising or from Section 708 capital raising from retail investors. It's interesting to have a look at some of the forecasts that have been made as to what's going to happen in this market. You need to remember that Australia is playing catch up. New Zealand, UK, USA, Canada, and most of Europe has had crowdsource funding, equity raising available for their small companies for the last 6 to 8 years. We're playing catch up. Enable funding through Australian Small Scale Offer Board, which they have acquired, had the first Australia crowdfunding platform since 2007. They were primarily dealing in helping companies who were trying to raise capital as Section 708. They had a special license from ASIC. Enable funding through the ASOB banner raised $148 million for 176 companies. And their website indicates that they have 30,330 exclusive members who are all potential investors if they like your company. Enable Funding's made some forecasts as what they think is going to happen in this crowdsource funding environment. They believe the capital raised in 2016 was about $119 million. Some of that would have been early stage innovation company capital raising, but the majority was probably Section 708. Their forecasts for the next 4 years make interesting reading. 2018, 420 million. 2019, 688 million. 2020, a shade over $1 billion. And 2021, 1.5 billion. Now, these are the estimates of the most experienced company in Australia at assisting companies to raise money as a private company from investors. By 2021, $1.5 billion. That's a lot of money. If you've got a worthwhile project you can use your share of that money in. Within ESS Small Business, we have a range of packages to assist you to have a better understanding of what crowdsource funding is all about. And we've broken them into components. We've got SME's Introduction to Crowdsource Funding. There's 3 free articles there which you can download and read. We then have the Understanding the Crowdsource Funding Offer Document Process, which we take you through the step-by-step of what all this is about. And then we got the overview of the Crowdsource Funding Offer Document, preparing the Crowdsource Funding Offer Document, which is where the most complicated work has to be undertaken. Introducing this crowdsource funding intermediary, identifying who they are, and giving you the assurance that you understand what their roles, responsibility, and very importantly, their powers are. Then we got investors' protection and opportunities with crowdsource funding, and a post-crowdsource funding capital raising overview. So they're the documents, and alongside them are the prices that we normally charge. And there's a combined document where we've put all of those products together into one overall package, combined crowdsource funding package for $799, including GST. But of course, at present, we have the Black Friday sale, which runs through to the 3rd of December. This is 40% reduction on those prices that I summarized just a moment ago. So if you wish to subscribe and take advantage of the Black Friday sale until close of business on 3 December, please go to www.esssmallbusiness.com.au, click on subscription, and enter the code ESSSBBF40 so that you can avail yourself of the discounted prices which we have made available to assist the small and medium-sized business community to have a better understanding of what crowdsource funding is all about. If you want more information, why don't you go to www.esssmallbusiness.com.au/crowdsource funding/learn more, And we have got a fair quantity of information there, looking at crowdsource funding from a range of different angles. There's some free videos and free webinars that you can watch at your leisure. If that information doesn't give you the answers that you have questions for, well, please contact me. Send me an email or give me a phone call. There's some phone numbers and there's my email address. If you want to do some further research, our website for the product targeted at accountants is www.essbiztools.com.au. If you wish to understand crowdsource funding from a business point of view, please go to www.esssmallbusiness.com.au. So hopefully that gives you a far better overview of what is happening within crowdsource funding as it applies to small businesses and medium-sized businesses. Thanks for participating in this webinar. If you have any questions, please contact me. Have a great day. Goodbye.